All right. Hello, everybody, viewers. Welcome to the video. I'm going to be here giving some technical analysis. I've got a few friends with me, and they're probably going to be giving some of their input, but I just wanted to go through a few charts with you guys. Um, I just want to say that nothing that me or anyone else says here is financial advice. We're not financial advisors. Nothing should be taken as financial advice. Um, we're here strictly for entertainment and educational purposes only. And we're just strictly going through some technical analysis and how we see things in the market and the condition of the market and a few different assets here. So I'm just going to start off with what I'm looking at here on Bitcoin, and I'm going to go out to the daily chart. I have a few scenarios where where I think things could have played out if we were to continue to break to the upside. However, um, what I have found over the past couple of days of watching the price action is we have sort of been struggling with the top of this range here. Now, I have the top of this range drawn out from this all-time high here, and then just in the interest of getting a few good contact points, I have it drawn and anchored down at this recent high that we've made. Now, this wick I had drawn it, but this wick obviously wicked through it a bit. So the one thing that is like pretty prominent in your face on the chart as of right now is this rising wedge pattern or ascending wedge, however you'd like to refer to it, that me and some other traders in the community have noticed in the chart. Um, and this, this is a bearish pattern for anyone who doesn't know. This is typically a bearish pattern, and when broken down from and having a bearish retest from the top side of it, or sorry, after breaking down through it and closing candles below this trend line, if you were to get a bearish retest and then it um, continues to drop from there, we can take a measured move from the bottom of the wedge to the top of the wedge to see how that would play out. And it gives you a number somewhere like around $54,500 roughly. Now, that's just a rough estimate, and when um, I'm giving a projection like that, like it is just a measured move, they don't always play out exactly to a T. And the other thing that is sort of coincidental about it is the fact that it did form a rising wedge into a resistance area, so a horizontal resistance. If we just take a line, and if you follow any other TA channels, I'm sure that you might have seen, people pointing this out as sort of a resistance zone. So obviously we've struggled to get back above this level here, which ever since the all-time high, it has now been today's day 141 that we have failed to break to a new all-time high. So Bitcoin has essentially gone sideways for 141 days. So almost, 4 months, almost 5 months, I guess. Um, and you not only did you meet this horizontal resistance here, which is, pretty crudely drawn. Um, if you were to, move it up a bit here, like as far as where this blue line is, I had anticipated some sell pressure coming through at that point. I thought maybe it would have gotten a little bit higher. But if you do note that this descending trend line where you make quite like several points of contact, you hit it here, 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 and then again here. And it's also coincidental that that rising wedge pattern is also present and began to emerge. Another reason why I had thought it maybe could have gotten up to as high as 70,350 is because that's a 1.618 fib level, if you draw it from this recent swing low down to where we ended up bottoming out here around, what was the low? This is in the way. We ended up bottoming out at 53,329, so, about 53,400, 53,300, somewhere about that area. Now, this is Bitcoin Tether Perpetuals contracts on Binance. Um, that's the chart that I usually use to chart. It tends to have the most amount of volume, so I track that chart. Now, aside from Bitcoin being in basically a descending channel, as we see now, you also have the smaller pattern, which is a rising wedge. When we first started to come back up, we were mentioning some things, some reasons for, you know, why we could make a case for there being a move up here. And if we go back to that sort of date, sorry, there's a lot of material to get through. We were mentioning that there was a bullish divergence on the daily chart. It's this one right here. So I said one more thing I think is highly worthy of note is this incredibly clear bullish RSI divergence as well as bullish divergence in the stochastic RSI on the daily. This is discrete but may end up being extremely powerful when considering more immediate bullish reversal back to the top side of the range. And we've got some various other people that have posted some technical analysis, which I'm also actually going to come back to. But aside from so we had reason to believe that this was an area of value, and after that bullish divergence emerged, we did end up getting that move up out of it. And after that aggressive move up, there was also a few other things that were factored in as well, like for instance, the um, standing President Joe Biden. It was brought to everyone's attention that he was going to be dropping out of the race and was not going to be running for re-election. So that was one bullish catalyst. The other bullish catalyst could have been the Bitcoin conference, which was taking place around this time. So there was plenty of reasons that I think might have been responsible for this move up. However, this move up was into resistance, and it didn't seem evident to me that the momentum was going to carry much further past this, and that was due to this sort of double top looking thing in the stochastic RSI and sort of starting to lose momentum. You also had this higher high with a few rejection wicks, this doji here, this indecision candle, and then followed by this other rejection wick. And on top of that, you did have this, within this rising wedge pattern, you also did end up having a bearish divergence on the daily chart. So where we had a bullish divergence here, we had this lower low in price, and we had a higher low in the RSI. Now I'll just hide the stochastic for a second there so you can see that a bit more clearly. So we have a higher, lower low in price and a higher low on the RSI. So that's bullish divergence. What we ended up having up here is when I noticed it was struggling with this zone, but continued to seem like it had some bullish momentum after coming down, retesting the 50 daily EMA. It ended up then making another attempt for the top of the range. However, this rejection wick, accompanied by this lower high in the RSI, gave us a bearish divergence. So you do have here a higher high in price and a lower high in the RSI. So that's bearish divergence that has now emerged on the daily, which was another reason for why I thought that it was more probable that Bitcoin was going to go down. Since then, we did break down out of this rising wedge pattern, and depending on how you have your lines drawn, um, how it makes contact with the candle bodies, wicks, or um, whatever suits your fancy. This is how I have it drawn, and I figured that this made the most sense considering this had the most points of contact and appeared to be the most well-respected trend line. Um, so that's why it made the most sense to me. Now, when we zoom in on the smaller time frames like the 1 hour and the 4 hour, we can see that not only did you lose this trend line, you came back up and retested it from the bottom several times before ultimately rejecting, and you got this big move down. You were also rejected from that trend line as well as this 50 EMA on the 1 hour, which also the 50 EMA, which is the orange line, had a death cross with the 200 SMA on the 1 hour. Now, you also lost this level of support here. This white line was support from all the way back here. Up back here, it was resistance on April 22nd. On May 23rd, it was support, and then support again all the way through May 31st. So this was a critical level as far as like support and resistance goes. This is considered a support resistance flip. And after the move up, you can see it struggled to stay above it here, retraced a bit, moved back above it here, attempted to hold it here one last time, and made our final move up where we ultimately got rejected. And Bitcoin has now been putting in essentially lower highs and lower lows ever since then. So that's one take on the current price action. I was wondering if maybe it would make sense for the price to bounce around 65K because this trend line was here. Ultimately, if it had made contact with it here, there would have been more confluences to suggest that it had cooled off enough to maybe go a little bit higher. Ultimately, it did go a bit higher. I believe the ultimate rejection point was $70,081. Now, that after hitting that price, you did end up losing this support here, which is around 67,200, just for a round number. Um, so you sort of lost this structure here, and I'm just kind of giving a breakdown. It might seem like I'm rambling a bit, but I'm just sort of giving a breakdown as far as why this support and resistance has relevance. So what I mentioned as far as multiple confluences was this pink line here. That is the anchored VWAP from the all-time high. And just bear with me because I'm trying to recap a lot of price action that might also be referred to in the future, and also some multiple different indicators and moving averages, whatnot, that I'm looking at. So bear with me. This anchored VWAP from the all-time high was resting at about 65K. And what was also resting there right around 65K was this previous 1.618 level. Now, where I got that was I took and drew a fib from this recent swing high all the way down to the recent swing low. So the recent swing high before this was, it might be easier if I actually go back out to the daily. The high of that candle was 72,144. The low of this candle was 53,329. So I took and drew a fib from this top here all the way down to here. When you break the 618 on a retracement upwards, if you're able to get back above the 618, that gives you a bias to at least touch the zero line. So another reason why I was maybe expecting a little bit higher, or I wouldn't be surprised if the price did go a bit higher. Of course, it didn't appear as though it had the momentum to push any higher at the moment. So where we sit right now is above the 50 daily EMA. So I showed the price target from before, the potential price target. If this is indeed a rising wedge that has indeed broken down, which it looks as though a lot of market participants feel that way, then this approximate price target would be somewhere between 54 and 55K. I believe that it would be rather. I think it would be pretty natural if the price was to come down even lower again to test the bottom of this channel. Some people are sort of in agreement with me. Some people are not in agreement with me as far as that goes. But if you zoom out and we go on the weekly, this this entire structure here, what you're actually forming is in essence a massive bull flag. So this is a large bull flag structure that could end up playing out to a much higher price target, somewhere upwards of 111,000. So somewhere towards 111,000, over 100K basically. So that would be the approximate measure move. You could you could draw it from where the breakout point is. And let me just get rid of these because I don't think that this scenario is going to play out right away. And these are just a lot of doodles that I had on my chart. So you can either draw the measure move from the breakout point or down here. I mean, this might be a bit more of a modest target, somewhere around 95K. I don't think that's impossible at all by any means. Again, some people think that it's not going to. There are those out there that don't believe that Bitcoin will hit 100K. Certainly not this year, maybe not even this cycle. I tend to want to believe that it will go well above 100K. I have a bullish macro bias, and we have been in a bullish uptrend for over 2 years now, or well, I'm not sure if it's been over 2 years, but since November 7th, 2022, we have been in an uptrend, a macro uptrend. So until that shows signs of breaking down, I'm going to assume that the Bitcoin 4-year cycle is more or less intact. It might be different. Every cycle is different. But I'm going to assume that it's more or less intact until we really start breaking down some major areas and some major market structure. One of them being around this 48K level. You can see that there was a lot of significant wicks here. And I will actually return back to this level in a moment when I go onto a bigger time frame. I'm also not going to try to make this too long and drawn out. But where we sit today is we have the daily candle body close. The daily candle body close was 65,328. And you did close above the 50 daily EMA. For a lot of the time, you were below this anchored VWAP. So what I want to say about the daily candle is that this is actually a very impressive daily candle. This is what could be referred to as a bullish hammer. Hammer is a reversal candle for those who don't know, and typically you would want to find them at the bottom of a trend. Where they're most powerful and where they become a reversal pattern, a bullish reversal pattern, is at the bottom of the trend. Is this the bottom of the trend? I'm not sure. I'm not convinced. What I can tell you, though, is that this is a long wick stretching all the way down to 62,200, somewhere around there. I think the low of it was 62,271. And it ended up buying all the way back up and closing above 65K, 65,328. So this is a rather bullish candle. And it's actually very interesting because you did break down out of what is out of a bearish pattern. This is considered a bearish breakdown. However, you've got a bullish candle immediately following that bearish breakdown. So Bitcoin's actually at a pretty interesting spot now. Another thing that we should mention probably is this bullish stochastic RSI cross. So this stochastic RSI cross is showing that some momentum is being gathered. Ultimately, you would want both of these lines to be above this 20 area in order to try to confirm a momentum shift to the upside. But the first step towards that momentum shift is a cross from the fast moving line to the long moving line. So this blue line, basically the stochastic RSI, is momentum. And it sort of dictates momentum. So when the blue line is above the orange line, you're generally going up. When the orange line is above the blue line, you're generally going down. And it's just a rough idea of, you know, momentum, not in terms of, like, not always exactly to the price, but in terms of momentum, generally when the blue is above, the price is going up. And when the blue is below, the price is going down. You can see it here, and you can also see it here. So the first step to bringing some more bullish momentum from this area has occurred, which is that cross. Will it sustain? I'm not sure. We would have to wait and see how this next daily candle closes and see if it's follows up this bullish candle with a second bullish candle. If it does follow up some bullish movement, you could expect to see perhaps some resistance from the bottom side of this wedge again, and you might get a better answer as to whether or not we're going to test some lower levels. Or if we do buy back into this wedge, we get to the top, break out of the wedge, and go higher, you could see a break of this macro descending trend line. So you might see a break of that macro descending trend line, potentially a break of the top of the range. And in that scenario, you would likely see numbers above 80K, assuming we have good momentum. In the case where we don't and we continue to break down from here, maybe it does go up and just for a bearish retest continues to break down. I would see around 60K as being probably the first stop. This is a 618 level that was drawn from this local bottom here to the top, the recent top that we just put in. So that sits just below 60K, which is also coincidentally the same area, almost identically to this fib that I mentioned earlier, drawing from this local high to this swing low. So you've got a few different confluences here. Another one being this support resistance line that I have drawn there around 60K. So there is reason to believe that price could potentially hold up at 60K if we were to break down further from here. However, if we do lose 60K, then I would say that our next stop is probably revisiting the bottom of this channel, somewhere between 50 and 52K. Might dip a little bit lower with just a wick or something like that. It depends on how people are reacting if and when we get that low. But for now, we are still above the 200 daily simple moving average. So that in and of itself is bullish for the time being. When you're above the 200, typically as a rule of thumb, it's a bullish signal to be above the 200. You're also above the 50 EMA on the daily. So both those things are bullish. This candle is bullish. But one thing I wanted to mention is that I noticed this pattern today, and this green bullish candle from 2 weeks ago, followed by this doji candle with two long wicks. Well, the top wick isn't that long, but you have wicks on the top side and a thin body. That's technically a doji. Now, if this candle becomes a bearish candle and engulfs this full candle, or at least 60% of this candle, this is considered a bearish pattern. And if I just sort of hide my drawings for a second, you'll be able to see it clearer. Um, so this is the pattern I'm referring to here. It's a 3 candlestick pattern, and that's actually a bearish pattern, bearish reversal pattern. And it's occurring at the top of a range and descending trend line. So that's something that I'm going to be keeping an eye on. And the biggest final thing that I wanted to mention was this right here is the bull market support band. Um, if anyone follows Benjamin Cohen, he mentions this quite a bit, and it is the 20-week SMA and the 21-week EMA. Now it appears as though we did break down it. So typically in a bull market, the idea is that if you are in a bull market, you will typically hold it as support and hold an uptrend. And when you are below it, it's a bearish signal. Now you did dip below it here once. You got back above it, held it as support. You went up. When you fell through it again, back here in 2021, came up, rejected from it, and rejected from it here and here. So the way that he puts it is you could also refer to it as the bear market resistance band as long as it's below, as long as the price is below it and being repeatedly rejected by it. But for now, we're going to refer to it as the bull market support band. And you can see that the price did come up. It stayed above it here, used it as support, used it as support here, briefly dipped below it here for, several weeks or a couple months maybe before getting above it. And you're essentially above it ever since. You did come down when we had that big drop in April. You did come down to it and you visited it here and then wicked right off of it, and it caused this second move to the top of the channel, which ultimately resulted in more or less a double top on the daily over here. Now, when you got rejected from this double top, you did fall through it again. So this is technically a bearish signal where you're closing bodies below it. However, we only technically closed 2 candle bodies below it, and then the following candle body did close above it. So the entirety of the bull market support band, which is both the 20-week SMA and the 21-week EMA. So right about now, where we sit now on the weekly candle is inside of it, and you can see on the daily, if you could imagine it being stretched out here, because it takes another week's worth of price action to actually show up on the daily chart. However, you can imagine that it looks as though this wick came right off of the 21-week EMA. So that's the green one there. If I just open the settings, oops, how do I open that on this? So the 20-week SMA is the red one. The 21-week EMA is the green one. And the green one, it looks as though it crossed below. So the 21-week EMA crossed below the 21-week SMA. And if we go back to a few times in the past where it has done that, this is one time that it did what we just witnessed up there. However, it was only temporary. It was temporary. The price dipping below it was really rather brief. You only ended up spending a couple days down below it before getting back above it again. You did, however, lose it again. And when you lost it this time, it was after this 21 EMA had crossed below the 20-week SMA. So the 21-week EMA is below. So when the price fell below it, you ended up rejecting from the 21-week EMA twice before you could break through it, then rejected from the top of it, gave it one more try, and you actually ended up putting in this higher low. Oh, there's everything coming back to my chart all at once. Before we finally got our breakout, and the ETF news was incredibly bullish narrative that just pushed the price without any sort of terms of retracement for that period of time. It was pretty wild. So when you did have that bullish move up, the 21 week EMA did cross back above the 20-week SMA. And after that cross happened, you did just get continued price upwards. Now the price consolidated for a few months here. You had one last big drop, but you did stay above the bull market support band. You wicked down to it here, essentially bounced off of it, and then you fell below it here. So the only thing that I'm trying to illustrate here is that the 21 week SMA is above the 21 week EMA. If we go to some other instances where that happened and the price fell below it, it didn't end up being a good sign. It was a pretty bearish sign in these cases. However, there were some other macroeconomic things happening at the time. This is another instance where the 20-week SMA was above the 21-week EMA, and you fell below and consolidated for several months before you were able to get back above it, which then resulted in another crossover here. So it's not necessarily, I don't think that crossover means that it's the end of the world. It's not the best thing to see, like, I don't think, in my opinion. But as it sits, you are currently resting inside of the bull market support bands. What my hope would be is that if we are to go back to the bottom of this channel here, and maybe the drop lasts through August, or maybe we have a slower drop or slower bleed out that takes a bit longer, and it ends up going into September, where we might end up going a little bit lower. My hope would be that we do see a final capitulation and we get a mega boost from that level, start to create higher lows, and then eventually break the top of this channel, and you get essentially like a completed bull flag breakout, where we can then go up to these higher targets. Now, having said that, obviously there is where we sit in the price right here. I have this sort of regression trend channel. You can see that the price came down, touched the center of it, came up, and more or less rejected from the top. This red line, this dotted line, and this green line. So it would make sense to me if we were to continue downwards. I see this being a perfectly reasonable place to bounce. And the reason why I don't think that we would be in danger of threatening the bull market is for a couple of different reasons. Now, I'm just going to take you way out and then zoom back in again. I'm going to take you way out real quick to the 12-month chart. Now, on the 12-month chart, I'm not going to go too deep into the 12-month chart because I actually don't even have the proper chart for it at the moment. But these were the highest 12-month candle body closes in history before this year, essentially. So this body closed at 46,210. This body closed at, or this body opened, sorry, 46,210. So you get that line there. So we have this structure here. Now this candle is well on its way to becoming the highest yearly candle body close in history ever for Bitcoin. And for those reasons, I don't feel like we're in threat of a bear market if we do not close below this level. And this has several months left to go. It has 4 months left, 5 months actually left to go. So I think that as long as we stay above this level, it's perfectly reasonable to believe that we are in a bull market still. I don't believe that we will return quite that low to 46,200, but I think as long as we stay above it, we're okay. Another thing that I wanted to go to was the monthly chart, just to illustrate why this red and yellow line has such importance. I should have put a stopwatch to keep track of time. Um, so this yellow line, this is above this yellow line is the close of what was previously the highest monthly candle body close in history before this point, March of 2024. So back in October of 2021, you got this candle body close of 61,348. So that's what this yellow line is. And if you look at the monthly candles, we appear to have been building structure above that line, which is a pretty strong signal to be spending this much time in consolidation, several months above the previous monthly highest monthly candle bodies that we had printed before. You can see there's actually resistance here, but now we're building and forming structure above it, and that's an incredibly strong sign. You do have some wicks below it. Like you have several wicks below it. This candle body did close below it, but every other candle body did not. I wish I could move this out of the way without disturbing too much stuff. Okay, this wick all the way down to 53K and then bought back up and closed above this yellow line. So this appears to be a very strong zone of consolidation. So at this period of time, I am not concerned about falling into a bear market. Am I short to midterm bearish? Yes, technically I have a bit of a bearish bias because I think it's just more probable that we're going to continue to travel back down to the bottom of the range. However, if we close one monthly candle body close below this would be a semi threat, but multiple is going to be like a more multiple closes is going to be, really a much bigger threat in my opinion. And I don't really expect to see that necessarily. I think that if there are going, because a lot of price action can happen within 1 month, you could travel down for 2 weeks, and then the following 2 weeks could be all buying, and it could be bought back up just as much as it fell. So a lot of price action can happen within 1 month. A lot of price action can happen within 2 weeks, and we've seen that displayed over the past couple of weeks here. So the other thing, the other line that I wanted to mention was this red line. And this red line, where is the 2 weeks? So the 2 week chart, these candle bodies, these are the highest 2 week candle bodies. And that line is at 63,316, excuse me. So now that you have some idea as to why those areas have relevance, it would probably make sense in a bigger perspective to see this as an area of value. This whole zone is an area of value between 61,350 and 63,300. And if you got this wick on the daily all the way down here and then was bought right back up. So clearly this appears to be a strong level. This level here also has the 200 SMA on the daily sitting right around there. So I just wanted to give some context as to why those two lines are relevant. Um, and if we actually go down to some lower time frames, we can get a better idea of what actually happened to the price today or yesterday. You had actually a really nice bounce off of this 200 SMA on the 4 hour. However, the 50 EMA is still pointing down. The last time you visited it, you fell through it, came up rejected from it, came up rejected from it again. You also lost this support at 66,150. So if we were to travel back up there again, my instinct would say that I would expect selling to come in around there. Um, and it could also push it back up above it. We could flip that resistance into support again. But whereas we did appear to get a rejection, we do appear to be breaking down out of a bearish rising wedge pattern. I think it's more likely that if we do revisit here, definitely expect some selling to be coming in. Also up here, where this trend line is I guess that trend line disappeared, or I moved it over and now it's gone. But anyway, I'll just try to sort of redraw it again real quick. If we were to revisit, if we were to get back above the 50 EMA on the 4 hour, I would expect that next resistance zone to come in at 67,150. I guess the first resistance would really be 66,150. Or okay, yeah. So first area resistance 66,150. Second area would be 77,200. So that's my take on it now. I think that if we do continue to break down, first area for a potential bounce would be somewhere between the 61,280 and the 618 levels just below 60K, which is 59,765. So I think we could revisit either of these areas relatively soon. As far as the shorter term price action goes, on the 4 hour, you do have some momentum up on the stochastic RSI. You do have it looks as though it got oversold on the 1 hour back here, and you probably have some bullish divergence emerging here that I guess I must have missed before, but that is technically bullish divergence on the 1 hour. So, like I said, Bitcoin is in a very interesting spot because there's sort of a lot of conflicting signals. I'm not exactly sure what's more likely in the more immediate short term because we did have like a pretty strong bounce off of this level, and I think some of that can be attributed to the fact that there was a lot of liquidity sitting here. So this 63,200 level, if we go into my Discord and go into the metrics channel, um, I had posted this the other day, saying still stepping down on this liquidity below. Over $500 million hotspot liquidation point at 63,200. And we did end up going down to get that liquidity. On this, I don't know if it was this chart or was it the 2 week? Yeah, it might have been this one. We did end up going down to get this liquidity, 63,200. So you pretty much sweat that liquidity. There is a bit more further down. However, there is some starting to build up above the price. So I wouldn't rule out the possibility for a move up. But given the fact that we seem to have found a pretty significant top and pivot, and the trend has now been down, I'd say that it's more probable that we continue downwards. And also for like, sort of a lot of those other mentions that I mentioned earlier. And this, although you do have bullish divergence in the 1 hour, your stochastic is rather high and looks like it could be flipping back down and continuing some momentum downwards. So it is difficult to say. Bitcoin's kind of hanging out in the middle, trying to find support, but also breaking down from a bearish pattern. Could see some slightly lower price targets, could see some slightly higher price targets. Again, like I said, top of the range, 71,000, that sort of area, and then bottom of the channel here, somewhere between 50 and 52K, roughly, just rough numbers, for sort of if we were to make an extreme move back towards the top of the range, we could potentially break out and see higher numbers like 80K and a bullish continuation. I think it's more likely that we probably come down and visit the bottom of the channel, but that's just me and how I see it. And I've also been talking to a couple of other people. Um, we have a community of traders that we discuss technical analysis with. And one of them is my good friend Strings, and he posted some stuff in the technical analysis channel, which we can go and take a look at. He posted it pretty recently. Strings, are you there?
Yeah, I'm here.
All right, sweet. So, Strings posted this. He said, "We recently broke down from an ascending wedge. Our immediate resistance can be seen on the 4 hour, which is a retest of the wedge 4 hour 50 MA. If we break through, the next level to look at is retesting the bull flag resistance 70K. Um, so he's got sort of this rising wedge thing drawn out here as well. Do you wanna go through some of this stuff? I can bring up the pictures and you can sort of elaborate on it and give your um, analysis and where you think the price is likely to head in short term, midterm, long term.
Sure, I'll keep it short and sweet. You've already pretty much covered everything that I would have mentioned in that. So yeah, I can just kind of summarize what my thesis was in those screenshots that I posted.
Okay, cool. So I'm on the first one now, where it's got your target of the rising wedge.
Right. So the daily time frame.
Yeah.
Right. So the daily close that we had today, we did break down from a rising wedge, which a rising wedge is a bearish pattern. And the measured move range for that is between 54, just above 54K, and up to just above 60K. And the way I like to make measured move targets for rising wedges is you take the vertical distance between the widest part of the wedge, between the ascending resistance and the ascending support, and you move that over to where the breakout is. So if it'll give you a line straight down to a target range, and then you take the thinnest part, the most narrow part of the rising wedge, and do the same thing. That's another vertical line, and that will give you a range, a target range that you can anticipate the price will go to in the break of that pattern. So personally, I'm expecting to see the price at least get to closer to 60K off of this rising wedge, and we had a strong move up today, but it stopped just about at the rising wedge, what used to be the support, and we're now testing it as resistance. So if we were to break above that that pattern, then we can start looking at higher targets like retesting the bull flag resistance. But as of now, we've seen a break of an ascending wedge. So personally, I'm expecting lower prices than we've seen so far since this last visit to 70K. And if you look at my the 4 hour time frame, the next chart that I shared,
Well, just
um,
real quick. So, like you've got so your first price target, which would be the thinner part of the wedge, would be the top of that zone there around 60K, and then the bottom one would be the more extreme, um,
exactly.
which is the widest part of the rising wedge. So taking it from here to here, here to here, this would be his first target, 60K, and then the second target is about what around like 50, the mid 50s.
Yeah.
All right, so yeah, we can go down to your 4 hour chart here.
Yeah, and this is just to kind of get a little bit more of a zoomed in perspective of that, but it's reiterating some of the same points that we have resistance overhead, which is from that ascending wedge that we broke down from. You also have the 4 hour 50 MA, the SMA, which when you lose that as support, you tend to test it as resistance, and so that's also explains a bit of the move up that we had after losing the 4 hour SMA 50 M SMA as support. We retested it as resistance, and we're having some trouble getting above that. So breaking those levels would be critical for even having a conversation about 70K before going to lower numbers than we've seen today. So that's pretty much my and what I have to say about the 4 hour. And however, if you look at
Line.
yes, yeah, the blue line is the 50 SMA on the 4 hour chart. Yeah,
Okay. And then the orange one's the 200.
yeah, exactly. And those are standard tools for analyzing based off of moving averages. It's kind of a standard set to look at the 50 versus the 200 and look for crosses, look for divergences and convergences, that type of thing, which it's a whole bit of a rabbit hole in itself, so we don't have to go down that. But basically, if you have an MA that's acted as support, and you lose it as support, you dip under it, you tend to retest it as resistance. And so that's what we did today after breaking that wedge. And so that brings me to the final time frame, which was the weekly. And even if we were to hit this severe target of the ascending wedge, which is the widest distance, that would be your most extreme measured move of that break. We would still be within a larger bull flag on the weekly time frame. You can see, and so bull flag really just describes having somewhat parallel descending resistance and descending support, which is a bullish pattern. You tend to break up from that type of consolidation, especially if it's following an uptrend. Like that's what describes a bull flag. And so even if we were to visit these lower numbers around mid 50K range, as long as we hold above that descending support, then there's reason to believe that we'd be heading back up to resistance and eventually breaking up from the bull flag, which if you do that, the first measured move target you would look at is the vertical distance between the parallel descending support and descending resistance. And so that gives you the target of between 87K to 88K. There's another way to do measured moves for bull flags, which is the length of the flagpole, which gives you a much higher target around like the 100K, above 100K level. But before we can even talk about that, you have to look at the first target, which is the width of the channel, because typically you see resistance there. You have some retracement. And so if you're swing trading and wanting to take profit and buy after some retracement, then that's typically where you would take your first profit. So overall, things are still bullish, even with this breakdown of this ascending wedge. We're still in a macro bullish pattern. And the only way that pattern gets invalidated is if we lose that descending support, which also happens to line up with the weekly 50 MA, which is, again, that blue line on that chart. And typically when you lose the weekly 50 MA in a bull cycle, the bull cycle is over. And so personally, if we were to lose this macro bullish pattern, lose the weekly 50 SMA, I have serious concerns for this bull cycle's health. So hopefully we don't lose that level. At the moment, there's no reason to believe that we will, but definitely a level to watch. So kind of the macro levels to keep your eyes on are 50K as support, stay above it, we're good. And breaking 70K resistance, we're breaking up from a macro bull flag. Let's go. So that sums up what I'm looking at. Thank you for the time.
Yeah, two pretty nice round even numbers. Yeah, I appreciate it. And then also you've got your more immediate targets there, like between 60, 55K as well. So would you say that short to midterm, like you're leaning more towards the bearish side, uh, based, off of the losing the 50 SMA on the 4 hour? It seems like would you be under the assumption that if we were to revisit the 50 on the 4 hour that we would get rejected from there and it's more likely that we continue down a little bit further?
Yeah, a big part of the way that I analyze charts is standard pattern analysis. And so if I see, an ascending wedge on a smaller time frame than this bull flag we're looking at, let's just ignore the bull flag for now. You see an ascending wedge and you break that pattern to the downside like you typically would, then I'm expecting to see that complete its measured move to the target range that I have in that chart. And anything that happens as far as oscillation up and down until then, it's just kind of white noise. Unless you break back inside and above the pattern, that's a deviation and a failed breakout. But as of now, we're still not above that wedge. You'd have to get above like 66.3K. So we get above 66.3K, we can start having a conversation about retesting the bull flag resistance around 70K. But as of now, that level is not even something I'm looking at in the short term because we have broken down from the bearish pattern.
Yeah, I agree. That sort of puts the bias in it on its own, from there, just breaking down out of that rising wedge. I mean, I see potentially a case that we could retest maybe the bottom of it one more time, but meeting resistance there would I would definitely say is going to just kind of put the nail in the coffin, I guess. Maybe it could be a good short entry um, for some people who, maybe trade on leverage and have the ability to short. I know that Strings is purely a spot trader, so he's not really interested in taking short positions. He mainly just trades on spot. I've also been mainly investing in spot. Um, so I've been trying to buy the dips. So for me, it's not necessarily a bad thing if we go down a little bit more because I can pick up some cheaper altcoins for really cheap, and then hopefully we go back into a state where monetary policy is a bit more loose and we're in a more risk on environment. You're already kind of starting to see some larger cap stocks shift the momentum and capital flowing from out of larger cap stocks into smaller cap stocks. Like in the Russell 2K, you see the Russell 2K try to catch up to the S&P 500, and the S&P 500 has actually had a bit of a downturn itself over the past several days, and tried to break this downtrend here and got rejected by the bottom of the trend line that we were actually tracking for a while and following up. This looks like a rejection from the bottom of it, and you've now fallen back below the descending trend line that was acting as resistance. You've fallen back below that after a rejection of the bottom of the trend line that was acting as support for a while. So, not to say that S&P looks like it's gonna crash or anything like that, but you might be, if you end up losing this level like around 5400, it's probably likely that you're gonna come down to this 20-week SMA, like the 5300 area, potentially even 5200. And I wouldn't get too bearish until you're around about this area and you start to lose these zones. Otherwise, the S&P is still essentially in a massive bull market, and has been really since October of 2022. So one thing about the S&P and one reason why I believe it could be at a significant top is if you draw a fib from the peak of 2022 down to the bottom of so the peak of I guess it was more what December 21, January 22, down to the bottom where it bottomed out in October of 2022, you get this 1.618 extension, and we just actually hit that, and you can see how it reacted off of it almost to the dollar around this like 5600 range. You actually got above it for a little bit, swiftly fell back below. Like it was definitely some resistance through here. You wicked down through there. You got above it briefly at this point before falling back below it. And obviously we already talked about losing this trend line. This otherwise what would have been a good break before the rejection of the bottom of this trend line and falling back below it. So I wouldn't say that the S&P is too unhealthy. I mean, it's trying to find a base here around 5400. So it might try to hold that zone, but also it's not looking too great. It's looking more or less like it's in a downtrend at this point, from a midterm perspective, and could potentially, if not go down a little bit more, could potentially just go sideways a bit, into the election year, and when the election is resolved, and as well as some other things like some other macro political, macroeconomic things, when the election is resolved, and after we get some more clarity as far as what the Federal Reserve is going to do with the interest rates and whether they're going to start cutting interest rates in September or even earlier, that might give us a little bit more guidance as to what how the market wants to react to that, or if they decide that they don't want to cut until a little bit later on, that will also have an effect. Um, but so that's just a quick look at the S&P or US 500, real quick. And just lastly, I just wanted to quickly touch on the DXY, which the DXY obviously, went it more or less went parabolic back in the year of 2022, and it topped out way up here, somewhere around 114. Since then, it has been putting in macro lower highs, and we've been tracking this descending trendline resistance, which it appears to be respecting. You did have this descending channel, which um, ultimately briefly broke below this trend line. And back here, I was actually suspecting that if it broke below this trend line, it would come up and reject from here. So I was thinking that this could be the beginning of a bigger breakdown on the DXY, which is the US dollar currency index. It's basically paired against, six other fiat currencies, but basically it's the US dollar versus, some other fiat currencies around the globe. Now, you did break down, however, the DXY got back above it. So this chart is basically representing, for those who don't know, this chart is basically representing the US dollar, the value of the US dollar. Now, it has been rather strong, from, let's say, the beginning of June until the end of June. It was rather strong and in an uptrend. So that means that, other assets that are compared or valued in the US dollar are going to have a hard time gaining value because what they're priced in is the US dollar, which is gaining value. So this could be a representation of the US dollar gaining strength or gaining dominance over, pretty much any other currency that is priced in the US dollar, and that includes stuff like Bitcoin and the stock market, stuff like that, other risk assets. So since the end of June, basically, the DXY has been in a downtrend, which is actually kind of strange considering Bitcoin has had, well, Bitcoin did have a decent move up, um, but the stock market is actually coming down and has been coming down for a couple of weeks. Now Bitcoin is on its way back down. However, Bitcoin is, if it does travel lower, is likely to find some support um, at those targets that we mentioned previously. The S&P, I think, is likely to hold up some higher lows, higher levels, even though we may have lost this trend. I do have confidence that the S&P is going to eventually find its footing, whether it takes a bit more consolidation before it goes up higher. I do think that the S&P is eventually going to find its footing and go higher. I also think the Russell 2000, which is a chart that I don't have up right now at the moment, but I do think that the Russell 2000 is going to also play catch up with the S&P 500, the Nasdaq, and the Dow Jones, um, whatever else. And the fact that we're seeing the DXY go down during this time is almost that's a bullish signal for risk assets that are priced in the US dollar. You did have this sort of symmetrical triangle. If you have this descending trend line here and this ascending trend line here, you did have a bit of a symmetrical triangle forming there, which it looks like you broke down out of and then rejected from, pretty close to the bottom of it. and you've been going. The DXY has been sort of steadily going down and showing more weakness, losing strength. Um, pretty much ever since the end of June now. So for about a whole month, it's more or less been going down. You do have these um, pretty important local tops here. Well, they're not really local, but anymore. But these are some two pretty significant tops. So you did break down from that area. Now this fib that I have drawn here, I drew it from that local swing top. This is the highest swing top that we have so far, down to the swing low, and the where the DXY actually bounced was one on the top of this descending channel, the trend line from the top of this descending channel. So it found some support there, but um, this also appears to be a previous fib line from somewhere further back. But in any case, without trying to ramble too much, it did find support there, but when it did bounce up, it made a 382 retracement up to this 382 fib level. So that's where it appeared to have gotten rejected. And this indicator here that we mentioned before, the bull market support band, it is now below the bull market support band. So it's below the 20-week SMA and the 21-week EMA. So it looks as though it's rejected from the 21-week EMA after losing both of them. Got rejected at 382 fib level. That's, I mean, not exactly, but that's approximately, let me see if I can get my magnet to get there. That's approximately 104.747 that it got rejected at. So if the DXY continues to put in lower highs, and we've seen two pretty significant local tops, and this is actually a lower high right here. If the DXY continues to put in lower highs and continues to trend down from here, that's actually bullish and a good thing for risk assets that are priced in the US dollar, because as the US dollar loses value, the assets that are valued against it gain value. So, basically the prices of the assets that you're holding are going up. I'm holding quite a few things on spot. Um, I know that Strings is a bit of a swing trader. I'm not sure if he holds much on long term. Strings, do you hold anything long term?
It depends on the macro analysis. When times are right for it, sometimes I end up holding things for months. When things are not looking as bullish for the longer time frame, then maybe just a matter of weeks. But yeah, my goal is always to take profit at highs and to be buying at major lows. So swing trading is my strategy.
Yeah, that's cool. Yeah, more of a swing trader, in and out, trying to just increase your bag. Are you trying to increase your fiat holdings or increase your coin count, or both? Like sort of a mixture of both at the same time.
Yeah, for that, it really depends on where you're at in the market cycle. If you are under the assumption that you're in a bull cycle, which I think we can all agree that we obviously are, but you think that it's not over and that we're going to be seeing higher highs for Bitcoin and cryptocurrency, you would typically have a goal of increasing your coin count and taking profit at highs to buy lower and increase the amount of coins that you're holding, which you plan on holding in the long run for the next major highs. But if you're under the assumption that the bull run is over and you're starting a bear cycle, then the goal is just to increase your fiat by buying at on major dips and taking profit when the opportunities are there for that. And yeah, you're not holding anything at that point.
So I guess kind of the question that I was trying to ask was, do you kind of compound your bag? Like do you buy more when you like, so say you cash out on a high, say we've reached a swing high and you decide to sell something that you've been holding for a week, a couple of weeks, a month, whatever, and you sell out of everything. Do you then compound it? So like, meaning like taking the money that you've earned and then reapply all of that to buying the next dip, or um, do you sort of just take the cash that you earned and set it to the side and keep playing with the same amount of money that you initially started with?
Personally, I compound it, but whenever I'm looking at a buy range, I scale in buys. So, for example, with Bitcoin, we have a target range for that rising wedge, which is in a macro bullish pattern. And so, as we go down, I'm going to be scaling in buys from the top of that target range down to the bottom of it. And if we, the macro bull support is just below that target range, so it's not that far of a drop to realize, ooh, we're failing a bullish pattern on the macro and losing the weekly 50 MA. It's time to get out of this trade. So that's kind of a with my strategy, what my plan would be for trading Bitcoin with these patterns we're talking about.
All right, cool. Well, I think we've gone on for about an hour now, more than an hour actually. So we might want to just try to wrap things up. But before we go, does anybody here have anything that they'd like to mention about the price action, the current price action, what you think of the current price action, and what you think might potentially happen in the short term, mid term, the long term, as far as the price of Bitcoin or any other asset that you might be looking at? I see that Match has jumped in, and it looks like Faruno's in here. Do either of you guys want to give your 2 cents on the matter? I know that Faruno was talking earlier about what he thinks might happen with the price, uh,
Oh yeah,
short term.
yeah. I'm I'm back. Sorry, I had to step out for a minute, but yeah. I mean, I was listening to a little bit of what you guys were saying, and I actually I see along the lines of what Strings was saying. Um, I my my TA is a little bit more. I guess uh, I've had kind of a long term outlook on it, and my long term outlook just is a little bit more zoomed out. So I don't really I can't really bring up any charts or anything like that, and certain numbers and stuff. But my numbers are basically very broad sense. I kind of been saying I was foreseeing where we're at. I mean, I was foreseeing where we're at and possibly going a little lower. A couple weeks ago, people were, getting pretty bullish, and I have a bullish outlook on the whole long term aspect of it. But I think we could definitely test, you know, the lower part of this range before shooting up into the all time highs and possibly higher. Um, but I don't think we go too much lower. I think in the 60,300 range, close to even like 50, I'd say like 58.5, 59, right there could be like the bottom. But so yeah, I don't think we. I feel like there's a little bit of bullish sentiment right now. People thinking that we're moving up from this point, and it possibly could go up a little bit in the next couple days or something like that. But I feel like we're still due for like a little bit more of a correction, back down to the lower end of this, like local range, and you know possibly testing like up in the really high 50s, and even like just 60K, 60,300. That could be the bottom for a nice move up to break all time high, possibly hit that area up in the all time high range, possibly even get up into the low 80s. Towards the end of this is like all within the next like 6 months, I'd say. After that would be testing up into the high low to mid 80s, and then possibly due for a nice correction I was saying earlier, possibly 40 to 50% correction, and then that could bring us into like mid 2025, pushing up above 100K. Um, so that's what I'm thinking. I'm bullish as fuck on the whole crypto space, Bitcoin especially. Um, but I definitely think that we're not going to just go straight up from here. Um, Even if we are going to go up to at the end of the year, I don't think that we're going to go up like right away. I think we still have a little time to go back down in this like next month or two, and then we could possibly see towards like Q4 of this year moving up into the 80s. Um, and yeah, that's what I'm thinking.
Yeah, great. Well, thank you for giving us your take on it, your perspective.
Yeah,
Appreciate
no
it.
worries. Yeah, yeah. It's all with with a grain of salt because anything could happen. And what the main things that do happen are like those black swan events that will just throw all TA out the window. So,
Awesome.
but if we're continuing on these paths and election year and all this stuff happens and things go good, and then yeah, I think that to me, yeah, I think if things go good, that's what the outcome would be. If things go bad, it could go a lot worse than that. But like it's that to me, that's the best outcome of it, is what I've said.
Okay. So yeah, basically, like you see a chance of us going down, like in a nutshell, going down towards closer to the bottom of the Ranger channel, like somewhere between
Hmm.
50 and 60K, having a
Yep.
bounce, potentially breaking the top of the channel, like at, between 70 73K, going upwards of between 80 85K, having a bigger retracement, like a 40 50% correction back to like the high 40s, and then moving up potentially from there to a higher number potentially sometime next year. Like next year,
Yeah.
would you see a possibility for like above
Plus 100K.
100,000? Okay.
Yes. Yes.
Uh,
Yeah, and that's probably like possibly in the like September of 2025.
do you see that being like a um do you see it being a possibility to go above like maybe 120 150 being a possibility or
I don't. I think closer to like 110. 110, 115 maybe, but that 150, I'd say another year after that or something like that, because I can't just see us moving straight up like that. Those are big numbers, and
yeah,
that's like 100% from all time high. So we gotta kind of just be modest about it. Know that's big. That's big numbers we're talking. So um, it's possible, but I think even if we made it up to 110K or 115, like by the end of 2025, that's amazing. And yeah, I mean, definitely we're looking at those 150K ranges eventually, but I wouldn't say like at the end of 2025, but maybe up into 2026 or something like that. Yeah. And then yeah, I mean obviously as we get bigger numbers, we can grow exponentially, so making bigger moves are going to happen the higher price that Bitcoin gets. Um, but yeah, it's going to take a little bit to get up there and to get to gain that momentum that we actually can like crush those numbers.
yeah, it's cool that I like how you mentioned like 2026 being like a possibility where we're still going up because a lot of people have in their minds like the Bitcoin 4 year cycle, like it's four
Hmm.
years roughly 4 years from top to top, roughly 4 years from bottom to bottom, and it's been almost exactly 4 years. So
Yeah.
I mean,
Yeah, and that could be a huge, crushing blow to Bitcoin as well. But with the ETF and all that, I don't know. I mean, it's a different. We're in a different time than it's ever been.
yeah,
So
we certainly
we could break the 4 year cycle too.
exactly, and that's what I was going to say. Is we certainly have seen a lot of things happen this cycle that we have never seen before, like breaking the all-time high before the halving. Like that's never happened before. I think there were
Yeah,
also like some moving average crosses. I think on the weekly we had never seen a death cross between the 50 and 200 before. I'd actually have to go to an older chart to sort of display that on my screen, but um, there was a lot of things before that even happened in the bear market. You know, we had never fallen below the previous bull market top before, or at least not fallen below it for very long. So
yeah,
this cycle's been really interesting. We also, like you mentioned, have the Bitcoin spot ETF, which was a complete and total game changer. That was responsible for at least this whole move up, and really probably the move. So when I say this whole move, I'm referring to the move from 25 to 48, which I expected a more severe cool off to happen at that point. But people were so excited about the ETF apparently that it got bought back up at 38 and ended up going all the way up to 73. So I mean, yeah, it is. I do definitely agree with you that the 150K range is a big number, and that's really high up there. It's a very lofty goal. But I don't know, man. I mean, like stranger things have happened, honestly. And yeah, the higher, like one thing I will say, like agreeing with your assessment of it is that it was easier for the price of Bitcoin to go up when its market cap was lower. So the lower the market cap is, the easier it is to push it up, like in terms of percentage gains. So the higher it goes in market cap, the more value it gains in market cap, the more difficult it's going to be to push it up to those higher numbers. So it's going to take much more money to bring it up to those higher prices. So, I mean, I definitely feel you on that, and see where you're coming from when you say that, like, it's pretty
mhm,
it's highly ambitious to think about, 150.
yeah.
Maybe we need to try to hit 100 first, and like maybe we have to take a break at 80, like you're saying. So, like,
Yeah, I mean that 100's like a major psychological number too. So you got to think about that too.
oh yeah,
It might just people might just like try and take profit big time there. So if it does hit that, it's gonna be hard. It'll probably be hard to get up way up above that right away.
yeah,
So that could be a big roadblock right there.
I agree with that. And some people might be thinking if 100K is everyone's target, they sell a little bit early, and people start trying to sell at 95K or something, and then it never makes it past that. Then it's
Yeah.
like everybody run for the door.
Oh yeah, yeah, exactly. It's like everyone just like, oh yeah, I'm gonna take it a little early so I don't miss it, and then boom, there she blows.
Yep, I feel you. Um,
Yep. So yeah, that's all I had to say really.
cool.
Thanks.
Thank you. Thank you for your opinion. It's definitely
Yeah, no,
Cool. TA,
yeah, I'm
or
actually.
are we 2 hours too long?
Yes.
yeah, I know we've been going for a while here. There's one more thing I wanted to.
If you want to test it out for the sake of testing it out, I do have my chart shared right now from my phone, my screen.
Oh, all right, sweet.
So I can give you a little 5 minute TA or 10 minute. I've been sitting outside my mom's house to go inside, thinking that you guys were going to finish 20 minutes ago.
Uh,
I didn't think Farina was going to go on like that, but I'll give you a quick TA real quick.
all
Let
right.
me know when you can see my screen.
Yeah, I'm on your screen now.
All right, so back here, all the way here, whatever, that's the Elliott wave going down. We don't need to see any of that. That's where we really bottomed. And actually, on this chart, I had put a note because there was a lot of argument at the time. I was so PO'd that I actually threw down a note, but I didn't put a date. So we don't know if I was right or wrong, anyways. But this is on a weekly chart, weekly time frame. I'm going to pop it in and out of the time frames. Let me know. Let me get rid of this little floating head. And what you see here is the same thing over and over and over. It's a fractal within a fractal within a fractal. It repeats over and over and over. And what you're going to see is I'll show you here, and then we'll shrink it up real quick. It should take me 5-10 minutes at max. Where's my triangle? So you're going to see this repeat over and over, whether it's on the top or whether it's on the bottom. You're going to see these. This is what Bitcoin likes to do a lot of the time, because it makes sure that it wicks everybody out before the next movement. Instead of making the traditional big sloppy movements at the end, where nobody can tell that you're at the end of the top, and people are still trying to buy, and you get this huge range that discredits, the beginning of a pattern. It usually consolidates and shrinks down from there. Like, I guess you guys can see. So like over there in that area, it kind of made a bigger consolidation on that first candle, and it shrank down, and eventually started breaking out again. But up here, you have this megaphoning style. So when I bring it down to the 4-hour, you look at the 4-hour, we have this little megaphone. Let me get rid of that. We'll go to something more useful. You have this little guy here. All right. So we got this little guy here, where it can range up to the top of the red line and range down to the bottom red line and keep going, making itself bigger and bigger, screwing everybody and chopping everybody along the way. So that's kind of what I expect.
That's your mega.
From here, I do think we are on the way. You watch, it'll make more sense as we go through. So it's going to, in my opinion, come down to test the lows down here. It's going to break that low of 62, freak everybody out, test somewhere around 61 or 60. If we break this, that's where the higher time frames come in. We pop over to the 3-day, where we have, let me get rid of these guys. You have the same thing over again. Got one right here.
Another one.
However you want to draw it, it's getting wider and wider, wicking everybody out, consolidating within that range. Okay, so we look at that. It's part of the bigger picture. I'm going to zoom out to the weekly, which is where we started this little journey, where you have that big wicking everybody. And this one is more broadening. So at least if you were shorting at these tops, you were pretty consistent along the way. So if you got anywhere in there and just held your short and walked away and used a small enough leverage that you weren't getting wrecked or liquidated, it never did retest all-time highs completely and pass. So I think we are on our way now to test this line here, right, from that last one on the 3-day. If we break that, we come down to test the lows, and the lows are going to be down more here. Oops. More along here, whereas some people are going to try and draw the line here, but I don't want to do that because that was still an upward trend until here. So I want to start my downward trend somewhere after the peak. And that's just a preference. So I'll get rid of that higher line, which is where I come up with my ranges, and I look at that 100 MA and the 50 MA down here and how they're curling up to intersect with the price action at some point. And I think that price action is going to intercept somewhere over here. If it's, goes on longer, it could be up higher if we manage to break this high finally and start to go up. But I think we're consolidating within here. And whatever, we have all these tools. So let me find a tool.
What's like a rough number for where you would say you think that intersection could take place, where they all sort of come in conjunction with each other?
So let's see. So 3 dives pattern. One, right, 1, 2. Did I do it wrong? I did it wrong. Hold on. All right, so let's do that 3 dives pattern again. So it's a 3 dive. Oh, okay, yeah, I did it wrong because the way they have it drawn, you start from within the pattern, and the last point is outside the pattern. So I want to say we start here, somewhere near the top. There's one. Whoop. Whatever. I'll fix it in a second too.
Built up a smartphone.
Yeah. Now my mom's gonna start trying to talk to me outside the window. Great. To have me out here so long, she thinks I'm crazy. So something like this. Oh, it disappeared, of course.
I pretty much got the picture.
Yeah, so something like that where it would break out to the top side and you would have one more dive. So I was trying to draw out the remaining one that's going to go retest the lows before we can finally take off.
So you're thinking we have a bit more of a move, like an immediate move to the upside before breaking and making a new like lower low, like
Uh,
possibly you think
so
like
that's
this?
why I started on the 4 hour. The 4 hour we just peaked, so in the next 2 hours we'll probably be coming down to test the bottom of that little wedge that was made here. So we'll be retesting this low. But if you really wanted to, goodbye, you would test on the trend line, so somewhere lower than that low, if it actually comes down past this last candle. So really, what I do is it has to engulf and break this candle before I give a crap about all the way down here. Still, that's the direction it's going. You could pre-run it and get in up here. It's here to retest and come up. And if we break this line, that's where you get your 48,000 that everybody cries and runs.
Maybe that's
Now, I will be back. I
situation.
apologize. Hopefully, this is great and goes well. I'm going to get off for a moment. I'll be back in 10 minutes.
All right, cool. Well, thank you very much for your input and technical analysis matches. Appreciate it. All right, so um, the last thing, unless anybody else has anything to mention, is I just wanted to bring some attention to some of these charts that have been posted on the technical analysis channel because we have some people that are in here, but aren't really very vocal. But one of them is Lennon Gnarly, and he posted this where he said 4 hour BTC bearish divergence playing out. Bottom of the channel brings us to 51K. Something to keep an eye on for the higher time frame traders. So he is also he also has this sort of sentiment where it looks as though we're rejecting from the top of this channel, and then that we're gonna revisit the bottom of it. And that's pretty nicely drawn out there. He also had this shorter term sort of move set up um, while the breakdown was happening, or just prior to the most recent breakdown. So, and we also have some other little tidbits, like for instance, Randall here posted where he believes the Dogecoin rally is going to take place somewhere in this time frame. Might find a cycle top somewhere around here. Um, and it looks as though that's what he's trying to illustrate here between these time frames. It's a little bit smushed, so it's kind of hard to see, but looks like at some point by the end of 2025, he expects Dogecoin to be up in this area here and top out. So we've got you know we've got a good group of traders here. Some of us trade actively, some of us don't trade as much, but we enjoy technical analysis. We're really passionate about technical analysis, and we're always looking to add to our community. And any followers that we can gain and try to help understand markets a little bit better. But the target audience is not supposed to necessarily be um, only brand new traders. Hopefully, we got a good mix of brand new traders, intermediate or slightly advanced traders, and I hope that it wasn't too much. I hope there wasn't too much to have to sift through. As far as for those of you that are a bit more advanced, um, I hope that you were able to bear with us through the things that you already understand. For all the people that are new that might be watching this, we would like you to help you understand a little bit better more about markets. We're a community of traders that have been interacting with each other for several years now. Um, and we all just like to get together and talk about technical analysis. And really, my goal and what I think is some other people's goals here who share my sentiment is we would like to try to bring our technical analysis and our perspective into the public eye, as well as try to reach out to an audience of potentially new traders who are hoping to understand the markets a bit better. And again, I'd like to say for those of you who are slightly more advanced, sorry if you had to suffer through some pretty basic concepts. However, this is really our first attempt at a video. I also apologize for the long duration of this. However, there was a lot that I felt like needed to be recapped. And having said that, I do hope that if you made it through this whole video, thank you very much for sticking with us. And it would mean a lot if you were to like and subscribe and tell your friends about it. And hopefully, the goal is for us to put out some more regular content. And don't worry, because I definitely plan on trying to be quicker and more concise and sweet to the point. Like, some of my friends in here that contributed tonight were we also have a good group of other people that couldn't make it here tonight, but will hopefully be featured in future videos. So, having said all that, hope you enjoyed the content and would really appreciate if you could like and subscribe, and we'll see you in the next video. Thank you. And also thank everyone in here who also contributed to the conversation. And I appreciate your time, input, and perspectives. They are highly valued. And that's it. Now I have to figure out how to actually end the video. Okay, stop recording.